Good day, traders. I trust you're all well, and welcome to this second last show that we have for the year. Sorry about last week. We had connectivity problems, which led me to this week. Today is actually a public holiday in South Africa, and an unexpected public holiday until we won the Rugby World Cup last month, right? And the president and the parliament decided to award everyone a public holiday. So today is a public holiday to celebrate South Africa's win of the Rugby World Cup. So if you are in New Zealand, thank you for letting us win. In any case, the reason I'm saying that is that I'm not trading today, but I'm keeping the show going because, we canceled last week, so we've got to keep things going. So just accommodate me. So let's have a look at the market and let's see what opportunities would have presented themselves to us had we been actively trading and had we traded everything the way that we meant to trade. Now, always of interest when you trade in any currency, not any currency, any index, is to be absolutely clear about when the particular exchange of that country does open. So UK 100 opens at the same time as European markets open. So an MT4 is 10 o'clock. That's the first candle. I'm always looking at the first candle. And that immediately says to me, expect trading range because it's a doji, because the trading range price action, you expect any breakout to fail. So now we've got a bit of hindsight, probably a bit more educational. The other thing that you always need to look at is the measured move of the first candle. So I always just plonk it in, whether we go up or go down. So doji, bear breakout to the measured move. Now, if for any reason you decide, okay, I'm going to trade that second candle, which you shouldn't have because it's coming out of a trading range. But in case you do, you make a decision to do that. And you take in the trade and you put your stop, decide where you put your stop. When I'm taking a trade above any trade range, I use the measured move stop. So my stop would have been up here. So if you had taken that, if you hadn't put that in, you'd have said, oh my goodness, why is the market failing? But the market is failing at the measured move of the first candle. So you've got a choice. When it fails there, and I wouldn't have taken this way, but if you had, then you can get out of the trade. Okay, because it's hit a measured move and micro double bottom failed. Get out of the trade. Or alternatively, if you want, hold on to your trade with the stop up here. Okay. Never put the stop directly above here because of spreads and pips and different prices and all sorts of things. So that's the option you've done. Had you not taken that and said, okay, let's wait and see what happens, it comes back and it tests the high of the session, the opening of the first candle, gives you a decent enough two-bar reversal. You can take that trade. Your stop is still at the measured move of that. So if you'd taken that for any reason and you'd have gotten out, without being stopped out, or if you'd stayed in, you'd have had to endure a bit of agony in the stop. That's why we don't want to put a stop here because your spread might have been stopped out of that. Okay, so then you could have taken that trade. And again, we come back to the double bottom area. We've got a choice. Is there a lower high to put a stop in? There isn't. That's probably the most decent lower high. Or if you bring it up here, you get stopped out, and that's perfectly fine. Then you've got to decide, wait for the next breakout. Here we don't have a breakout. So while it looks like it is still going down, unless it held onto your trade, there is no way to have gotten in here with the way that you trade. Price action, you've got to wait for the breakout, which we get in. If this candle closes on its low, that's a beautiful breakout, breaking out beneath a wedge, breakout. Then you just want a pullback and look for a way to get in. So probably the best entry or entries. Now here's the thing: there's not just one entry, right? And when you are trading in the market live, you will get to know that there just isn't one entry into a setup. So there would have been the best. Wait in, put your stop. As soon as it closes, as a bear candle starts to move, boom, sell the market. Okay. If you're not fast enough and you're thinking and dilly-dallying and you get another bear candle, you're still within the setup, still within the same stop. So the only thing that's changing is that your stop is getting further and further away. So you could still get in there if you wanted. Okay, after that. If you don't get in that and that starts to pull back and you get a bear candle and say, you still want to get there, you can get in there, but guess what? You get into levels of support, you may not get your one-to-one. So, if you miss the first candle, get the second candle. Otherwise, just wait and do nothing else until the market moves on a little bit further. Okay, so that would have been an opportunity to get into the market. DAX. Now, DAX is just absolutely interesting. The only thing that I've managed to do before I opened was to put the opening. There's the first candle and there is the open. So even if you look at the UK 100, first candle, my magenta line, I keep it in. If the market comes back to test that, I know we're testing the open of this particular session, then I can decide what to do. So DAX opened, out of the Asian session or the pre-market, whatever you want to call it, strong bull trend, market going up. Bears tried to make it fail, and we opened up with a candle in favor of the bulls. It's a low test candle. We kept to test the moving average, and we closed right above, above the prior action. So very good for the bulls. Now, if you want to trade the first candle, measured move stop, because you might just come back and then you can get out of it with half the risk. But it carried on going up, dodgy candle, very not good for the bulls. You want to see momentum, but the market is going up, and as you look and you want to find a pullback, there is no decent enough pullback to trade. Okay, what's a pullback? We need to see a breakout. So here, there is a breakout, 1 bar pullback. You can get above that, high probability the market is going your way. But looking all the way in there, I would have probably been sitting and waiting and getting frustrated because there was no way to jump into DAX. So I would not have found a way to get in, and we go to the measured move and we just created a trading range. Let's put these bulls tried once, tried 3 times. So there's a wedge top within here, but look at the overlapping candles. Would I buy that? I wouldn't. I haven't seen all of this because I'm in the middle of a trading range. So I'll probably let this particular market go. How would I get into this market? Well, 2 ways. If the market starts to sell off, I need to see bear breakout. And I need to see the pullback. And I need to see the attempt to resume. And that's what I'm going to trade. Okay. We're not breaking out yet. I need a bear candle breaking out beneath this cluster of overlapping candles, closing on its low. It doesn't have to be a big candle, just be a trend candle. Even something like this would work. Then I need to see the follow through. You see the breakout, you need to see the follow through, and you see the follow through, then you wait for the pullback. You may get 2 or 3 candles. Like when we're down here, decent enough reversal, first, second, breakout, pullback, we're breaking out of this. The bears were trying to sell off, and we kind of broke out of this pattern here. First, second, confirm the break, then a pullback. That's what you want to see. So you want to see at least a breakout candle, a follow through. If I get a third one, even better. But then I want to look for that pullback that comes back to the EMA, and that's what I want to trade. If I don't get that, nothing going for the Germans. S&P 500. Now, this is interesting. Just flip to this. Remember, we're talking just here. We're saying on the DAX, if you get a breakout candle and a follow through and a pullback, then we'll have an interest to trade. While we're at it, let's just talk about quickly. Breakout, let's say we get it and get a lower high. Because we are now trading the breakout and the pullback and lower high, our stop can be just above here. Couple of points above here because of spreads and stuff, whatever. Okay, because we're trading down here. lower one, that's where our stop goes. When we get a second entry, then our stop comes to that. So the reason I flip back to this is slightly different structure, but there is a breakout candle on the S&P 500. There is a follow through. So we have a confirmed breakout on the S&P 500. All we need is a pullback coming back to the EMA. And if we do get that pullback coming back to the EMA, if we're going to be trading this, your stop is above here. Put a point, put spread above. Okay, so if it does come back, wherever it does come back to, and you get a reversal, that's what you want to trade. Okay. First candle of the session up here, and then the bears came in. Bulls didn't do much. It just double bottom, had an opportunity to accelerate up. Market failed, went into a trading range. So this is a trading range open that we have. And when you get a trading range, what are you expecting? Whether it's a one bar like we saw on the UK 100 or a trading range like this, for you to be able to jump in. If you trade in the way that I trade, you want to see a breakout of the trading range. Breakout, look at that. Breaking out, pullback. How? I don't think I'm going to write to my mother or my son in school and say, I saw a breakout pullback that I traded. It's still there, but it's not neat. And if it's not neat, don't force it to work. But in any case, we said, okay, breakout pullback, I'm going to trade. You can put your trade above there. You stop beneath the trading range. There's a measured move of the trading range. The market might turn there, return before that. So you can exit out of your trade before anything happens. Alternatively, the bear's been strong out of that. The measured move of breaking out of the trading range would be here. So if we'd had this thing that's taking place, if it had taken place here, and we got a pullback, then if it happened here, we could trade here. But now it's happening up here, so this is pretty beautiful. So you want to just wait. If you're going to be watching this, now wait for the pullback to the EMA and get a decent enough signal to trade inside bar, outside bar, high test, low test, whatever. Stop up here, and then you can be in. If you don't get it, you don't get it. It is not there. Excuse me, folks. Then on the Canadian currencies, trading buddy Ash asked me a couple of weeks ago whether I'd look at pound yen for opportunities intraday. And I had a look, but I knew the answer anyway, but I had a look. You can choose, if you're trading 5 minutes, just choose any currency pair. The opportunities come at different times, but they're literally the same. You just have to be cautious about the news that affects a particular currency. So I've got the USD card on. So I watch all the red news on the US. We all watch the news on the US. We have to. But also watch any Canadian news, interest rates. Then I watch some of the news on oil and gold, etc., to see what impacts it. When I'm trading a currency, I don't move my open to the open of the exchange. I just keep the open at the actual open of the day. So that's where the open of the day is. Because currencies, they're just 24/7, they're going. But then I'm interested when I come into market, say, okay, when I started trading, I was trading today, not a holiday, that would have been the first candle that traders trading this market are looking at. And then look for opportunities. So far, nothing is set up for us. So why do I say that? The key thing I'm always looking for is breakouts and then the pullbacks. That's number one rule. So there's no breakout here. Bear candle, there been a breakout, would have had breakout candle and follow through, stayed beneath the low. So we've done a tight trading range. We are in a tight trading range. So if at all there's going to be buying, I need to see confirmation of a strong pull breakout. I need to see a pullback. And then if I get a high one, I can consider it. Problem is the low of yesterday. We've traded beneath the low of yesterday, so the market is pretty bearish. So for me to buy, I'm not going to buy here. I'm going to wait for a breakout above that. Or if you get very strong candle here and a candle there and a deep enough pullback, that allows me, if I put my stop here, Okay, you barely get to one-to-one. But if I get a strong break on the pool that allows me one-to-one, gives me a chance at least to be able to manage my trade. Alternatively, let it go. All right, folks, let me see. Are there any questions? There are no questions. Thank you for joining me, and we will see you next week for the last of the show. Thank you very much, Marlon. Thank you for hosting, boss. We will catch you all for next week and the last show. Take care.